All right, everybody. Hey, it's Mark Mahaffey with Mark Mahaffey and Associates Real Estate, and I'm super excited today that I've actually got our favorite lender with us. So Charlie Fleming is here with Remarkable Mortgage. He's going to share a few tips that I think are going to be super helpful, and that's especially why I wanted to get on here with Charlie today. So let's just stop there and say, hey, Charlie, welcome.
Mark, thanks for having me, and yeah, man, great to see you. I appreciate you having me on.
Absolutely. Well, some of you may wonder, I mentioned this key phrase a moment ago, local, okay? I'm going to leave the names out, but you know the names. These big monster mega lenders, we'll call them, or mega banks. Oftentimes we can run into issues with those. And I've seen that through experience. So this is just not bashing somebody just to bash them, but we really want to make sure that you, as our clients, our buyers, are having a good experience and ultimately are actually able to complete the transaction. In other words, to actually purchase a home. I mean, that's the objective. So I love working with Charlie because he's local. And of course, not everybody is perfect. You know, that's me, that's Charlie, that's the whole world, right? We're all human. But the difference is this, is when you're working with somebody like Charlie, we can get things accomplished. We can actually make corrections when we need to, as opposed to calling that 1-800-NO-SERVICE number. Okay, you guys know what I'm talking about. All right, so I took a few notes, if you guys don't mind, and I'd like to kind of ask Charlie a couple of things and then just have a little bit of a conversation. Probably, I would say the first thing we should touch on is that people often hear the word prequalification or pre-approval. What does that mean, Charlie? I mean, kind of what's the difference there?
Yeah, great question. So a pre-qualification is when clients submit their information, but generally speaking, provide no documentation to support what is stated. Now, some banks and lenders use different terms. According to the CFPB website, pre-qualification and pre-approval in the government's eyes they're interchangeable terms. But however, that said, it is really based on what the lender does with that information. So more importantly, mainly with pre-approvals, that means that the lender is not only getting the documentation, but they're actually reviewing it, and they're looking at the income, their assets, and the statements that the client is providing. So anybody can get pre-qualified because essentially you putting in a questionnaire, you saying, hey, I make this much, I have this much money in the bank, and then the lender does not verify it. They just say, hey, based on the information that you told us, you're good, right, up to this amount.
Right.
Pre-approvals are a little different. They're a little bit more thorough. They say, hey, I make this amount. Well, that lender should be reviewing the income, assets, and more importantly, the credit and their ability to repay on that loan.
Right. And that's an important thing from our perspective when we're looking at homes. So if we're helping a buyer, we're trying to put a contract together, an offer for a particular home, it's super important to notate that difference, right? Because a pre-qualification on the seller side, think about this. If that agent on the seller side has some experience, they're going to be consulting with their client, the seller, and saying, hey, let's look at this particular financing here. Where is this coming from? Is it from one of those big 1-800-NO-SERVICE banks, or is it somebody local that we've worked with previously in the past? And can we trust that this is actually an approved or a pre-approved, as we say, financing or loan, right? As opposed to pre-qualification. So if they're consulting with their client and saying, this particular one is just a pre-qual, that means they could have simply stated, like, here's what I've got, and that's as far as they went. That's not as strong of an offer, is it, for the home seller?
Yeah, it's a level of uncertainty that as a seller, if you're selling a house, like, you want to know with as much certainty as possible that deal's going through. Now, yes, there's some things we can't control, like appraisals and title issues or inspection concerns. But yeah, I mean, you're a lot more stronger giving the seller and the listing agent that ability of like, hey, this income, credit, assets, they're very strong. It's been reviewed, and we're starting off on the right foot, towards closing.
Right. And so it basically gives us a competitive advantage, right?
Absolutely. And I think too, something that we do with our clients, that not only are we saying how much are you approved for, but we're taking a holistic approach of what do you want your monthly payment to be? How much money do you want to come out of pocket? It also allows us to be a debt strategy manager or a debt advisor. because people have credit cards and student loans, and they don't know they might be selling a house and they're making a lot of money off the home sale, and there's different restructuring. And so it allows individuals, what I've noticed, that if we can get people to shop with their wallet first, before their heart and their eyes, before they see the granite countertops and the new remodeled kitchen, they have a little bit more subjective thinking, because they're like, oh yeah, Charlie told me my monthly payment's this. And I think you're not as clients are not as confused if they're equipped to know, Charlie told me my monthly payment's this, my down payment's this, I feel really good about this position. And that way they can, because as you know, real estate goes from 0 to 100 very quickly. Yeah. It's, hey, I'm thinking about buying a house, we get pre-approved, and then you're showing them houses on the weekend. They're like, oh my gosh, we're making an offer. It happens.
That's true. And more frequently than buyers would think. They think originally, because we talked to them when they're first getting into the process, right? Just like you. And there's, I'm really just kind of looking. I really don't seriously expect that I'm going to find something. And then bang, it happens immediately. To kind of get ready, when they first talk to you, what should they have in hand, if you will?
Yeah. I think it's my first question, is what do you want your monthly payment to be? And have you thought about that? And how much money, not only how much money do you have, but how much money are you willing to spend? And how much money do you really want to have left over that makes you feel important? Or makes you feel secure, not important, but secure. What's important to you, I might say. But a lot of people don't really know where to start, and they think they're farther away from home ownership than they really are. And it's, again, a holistic approach of really a cash flow model that we do, because our end goal is we want to try to build wealth through home ownership. And so the questions that we ask is would this mortgage payment, it's your cost of shelter and your ability to manage the debt, will it allow you to still save money, stay out of any consumer debt, allow you to max out the 401k or the IRA that you have, and then have money left over to live the life that you want to live and not feel suffocated by the mortgage payment? So obviously financial documents, W-2s, self-employed tax returns, all that stuff. But through the questionnaire that we usually get, then we can guide them on hey, but I think a good understanding of the budget, cash flow, and then overall monthly debt of hey, this is how much realistically I can spend.
Sure. It's the part that I call the boring part of the process, right? Is digging out those W-2s and getting those records and things like that. But you touched on something there. We may hit it again here briefly, but it's what I call being house poor. So you and I are really on track with this, because I know sometimes people, especially if they've just met you, they may have the impression, and I think about it and I think, well, maybe there are these people out there. But Charlie and I are really kind of in the same path, if you will, when it comes to being able to appropriately afford a home. We do still want you to be able to enjoy your life. So just because, and here's where people get a little afraid, I think sometimes, I don't want to talk to a lender because he's going to push me into the big loan. As much as he can possibly get. And of course, the same thing with the real estate broker, right? It's they just want to sell me the biggest home they can because they want to make the most money possible. And that's not really our approach, is it? We would really like for them to be, since they are and become our friends, even if we haven't known them previously, these become people that we associate with throughout the rest of our lives. And so we want to be able to, for them to be able to enjoy their lives, right? Be able to go out, be able to afford their groceries, some of the extracurricular stuff, right? That's kind of important too.
Yeah. I mean, you hit it right on the head. One of our core values at Remarkable is we want to treat our clients like they're our own brother or sister. And if you're trying to sell a house for your brother, you are 100% going to look after his own best interests, and protect him like an older brother would, right? You're gonna same thing. If you're doing a loan for mama or dad, with the utmost care and strategically putting them in a position to build wealth and not just be salesy and just chasing after something. So. And we ethically have fiduciary responsibilities, and we want, I've seen a lot of people be house poor, and it's not a great position, to be in. And
No.
we're very transparent. We say like what our goals are for them, but ultimately our approach is that, and just like you, Mark, I know that we've had many conversations, is we're co-pilots. Like we are kind of counselors where you're going to say, hey, if you want to sell this house, it's going to have to be priced this. I'm not going to tell you what to do, but here's my recommendation. We can list higher, but this is X, Y, and Z on why I don't think so. But ultimately it's their call. So if they want to have a higher mortgage payment, we call them guardrails. Like, hey, you told me you didn't want to have this payment, but you can do this. But are you willing to do this? So it's very important though.
Well, yeah, and you mentioned this a moment ago too. I think this is important for people to realize is that there is a correlation. In fact, it's a very high correlation between home ownership and future wealth in the United States. I can't speak for other countries, but I've just seen this for the United States. Is when you own a home, you are much more likely to accumulate wealth over the period of your lifetime. Not that it's all about accumulating wealth, but the point is you're able to provide stability, if you will, for your family, right? So it kind of starts there. I had a thought, and of course, Charlie, it flew right out of my head. I'm sure I'll come back around to it. But that's why we're so passionate, I think, about getting people into their own homes and not continuing to rent. Sometimes people worry, not to get onto another subject, I guess you could bring it up too if you'd like, but the interest rates. Oh my gosh, all you hear about, interest rates are so much higher than they were before. And yet we're below the average, interest rate. And if you think about it, here's something that I tell the buyers when I first meet them. I'll say, listen, if you're renting now, you're paying a 100% interest rate. Okay. So maybe 6 to 7. I don't think we're in 7s. We're kind of lower 6s now, but that may seem higher compared to the old days of COVID when we had 2 and 3%, crazy stuff like that. But compare 6% to 100%. It kind of makes it like, I really probably should get in a home, right?
Yeah, absolutely right. And we lay out all the facts. Sometimes, renting's not bad. And sometimes it's a season of an opportunity where buying might not be the best. But I think there's this thing that you cannot put a dollar sign, and you mentioned it, it's not quantifiable, is the emotional stability that you feel in your own home. And being able to do the things that you want to make it your own home is something where you can't really put a price tag on it. Now, again, you don't want to be suffocating financially to have that emotional stability of like, this is my own home. But there is something like undescribable that you're creating the memories in your house. But at the same time, obviously setting up people to, financially win, is really important. And we have this conversation of like, when we talk about financials of like, how much money do you want to have left over? For first-time home buyers, I always just bring it back to say, hey, when the toilet breaks and the hot water heater goes out, and your lawnmower breaks, you ain't calling the landlord because you the landlord. And that's okay. That's fine. That's great.
That is okay.
But that's I call that the brutal fact of reality. So they're like, you know what, Charlie? Yeah, having an additional $1,000 in the bank just in case might be a pretty good idea. And we talk about
for
it.
Sure.
So.
All right, Charlie. So, we've covered, I think, some pretty good ground today. Here's, I think, probably an important perspective. Why is it important? Why is it beneficial for a buyer to go ahead and talk to you? Like they've just called me. I've met them for the first time. Maybe I meet them. We talk about some things. And it seems like right away, I'm saying, you know what? I've got a guy that's just the tops when it comes to lending. Of course, I explain to them so they are not fearful. But maybe in your words, why do you think it's important that they go ahead and get this pre-approval in their back pocket?
Yeah, it's a great question. So things happen, we mentioned this a little bit ago, but things happen very, very quickly, faster than anyone anticipates. And real estate is sometimes like the sport of boxing, and really good boxers in the history were always so patient, but at the right time, they were aggressive and they strike. Right. And real estate's very, very similar in getting all your ducks in a row, especially when you have to list a home and then sell a home, which can be very, very complicated. Getting your financial house in order. Another thing with us too, not all lenders are created equal, but like we don't charge anything for loan consultation calls. So like the questionnaire doesn't cost you anything. We do what's called a soft credit check. So it's not a hard inquiry. We don't invoice you to get pre-approved. It equips the individual to make a sound decision before the emotions get involved, because we want to find the client before the emotions flood in. And I think that's a step in the process where not a lot of first-time home buyers or even first-time home sellers, like they don't realize like, oh my gosh, like we're going from a 3-2 to a 4-3 and it's emotional again. And they forget, like, you know, when you stepped in the house, we want to find them pre-emotion so that we can talk just facts. So the earlier, the better to be equipped. And that way, I think it allows you to lead them knowing, Charlie, their cap is at X, like they need X amount of closing cost assistance, and we need to be aware to make sure that if the roof is old, like that could be an issue because, you know, we need a new roof basically for X, Y, and Z. So I think the earlier the better, more preparation time. There's no obligation with, you know, on our end. And as you said, when you're ready to make the offer and you present, because you're almost selling yourself with the listing agent, hey, we're pre-approved, we're doing a full price offer or whatever, like we've got our ducks in a row, like we're serious, right? We got the earnest money. So yeah, that's all those things I think bake in to having a successful real estate transaction for sure.
Well, that's huge, you know, and I know we need to wrap things up here. You know, people's attention spans, if they're still with us, that's awesome. Preparation is massive, okay? Because if we're ready to run the race, then they don't feel the pressure that it's all new. So we've got that pre-approval in the back pocket, because I've seen it more times than I can count. I call it broken heart syndrome, because sure enough, they think they're not going to make an offer on anything. They're just out to look. They find the home that is absolutely perfect for them, and they go, oh my gosh, I should have gotten the pre-approval. Now they struggle to catch up. And in the meantime, another buyer comes in that's already pre-approved, and they get their home, or the home they wanted, and therefore leading to the broken heart syndrome. Okay, so preparation is key. It just takes that stress off. It really does not impact your credit, because as you mentioned, it's a soft pull, and it gives us kind of a structure that we can work within to make sure we meet all the goals we talked about a little bit earlier, right? So all of that 100%. Being said, Charlie, I really appreciate you taking some time to kind of talk to me a little bit and maybe reassure in your words and the two of us having a dialogue, reassure our buyers that, listen, this is not a stressful thing. It's not an obligation. You don't have to go buy a house. But if you're ready to run the race, speed is key in beating out other competition, meaning those other buyers that are looking at your home. Okay, so we're going to wrap it up for now. I hope this has been beneficial to everybody. Listen, if you've got any questions whatsoever, you can always reach out to Charlie Fleming. Charlie, what's your, give them a little bit of information, best way to get in touch.
Yeah, you can find me on Instagram. I'm very active on there, Charlie_Fleming, FLEMING_. So Charlie_Fleming_. You can find me on Instagram. Please add me. I try to do a lot of educational videos. And if you're feeling insecure about your financial situation, I'm a perfect call for that, because I will talk with you and not make you feel silly, answer all your questions. And if you have those insecurities, bring those to us, because we'll talk about it, and it's a judgment-free zone.
Yeah, totally. Thank you, Charlie. And by the way, if you didn't get that, folks, you are welcome to reach out to me as well. You can see Charlie and I work together as a team. I think we do an excellent job, so say our former clients. And you, of course, can follow me as well. I'm on Facebook. Pretty easy to find me. Just Google Mark Mahaffey and Associates Real Estate, and I can always connect you with Charlie as well. Hey, we really appreciate you watching this video. I hope you stuck with us till the end, and we'll catch you on the next one.